Yes, welcome to it. This is Empire Crypto TV live here in Johannesburg. We are with Stone. I am your host. And welcome to the golden age of digital marketing, man. If you are trading digitally, you should be watching the show because there's a lot of information that we are giving out to our listeners, educational information, of course. Today I'm talking about indicators, basic indicators, man. I'm talking about, for beginners, talking to the people who are still striving on getting to know the trading market, particularly. There are people who are trading in Forex, whether you're trading in Forex, stocks, cryptocurrency. This show is for everyone because this chart right here that you see on my side represents a number of indicators that are just three of them out of a number of indicators. I've chosen these three for this show particularly. There are many indicators that you can choose from in the trading platforms, your trading view, whether you are trading on MT4, MT5. There are many indicators that you can use to try and forecast the chart or the market trend. So let us just read about it and the form of analysis that you would be doing when you are dealing with this kind of market analysis or indicators. You are dealing with technical analysis. That is why today this program is more of an educational program. First on top, you have the Bollinger Bands, okay? And at the middle, you have your MACD or MACD, moving average convergence divergence. Then you have your RSI, relative strength index. These are the most basic indicators that are common. These are common indicators. I know there are people who buy indicators, but it is advisable for someone who is still a beginner in the trading world to start with the most basic things. Understand the basics. Once you understand the basics, and then you can go on to much more advanced indicators, maybe even have to buy your own. Maybe sometimes some traders are skillful enough, they write their own indicators and they have their own programming where they write these indicators and they sell it to various customers who are trading on the daily charts, intraday charts, and whatsoever, whether it be investors. Let us just look at some of the main definitions of what we are dealing with when we talk about technicality. There are two forms of trading that are existing that are most basic. Maybe there are many forms, but I'll just talk about two basic forms. There is technical analysis and there is fundamental analysis. Fundamental analysis is when you are trading, when you are watching news. Now, that's a different topic. But today we are dealing with a topic called technical analysis. Technical analysis is a method of predicting price movements and future market trends by studying charts of past market action. You can always go back with your chart. It's there. Just click and drag the chart. You can just change the time frame even, and click and drag the chart as way back as you can, just to see if there's any pattern that might be repetitive that you can take an advantage of. Now, this is done by most experienced traders and investors who have been in the game for a long time. There are people who have made money using that technique that I am talking to you. Let me carry on, okay? Technical analysis is concerned with what has actually happened in the market, okay? In the market, not what's happening out there or what the president is saying or what Elon Musk said or what has happened in the war in Ukraine. They just simply look into the chart and they just technically work things out from that perspective without having to acknowledge everything else surrounding the market, especially the news. Okay. All right. It goes on to say, rather than what should happen, and takes into account the price of instruments and the volume of trading, and creates charts from the data to use as the primary tool. One major advantage of technical analysis is that experienced analysts can follow many markets and market instruments simultaneously. With the case of a fundamental analyst, he will look at the news, maybe let's say Bitcoin, look at what's happening in the world of cryptocurrencies, look at maybe Ripple, for instance, since they've been going on this case, and look at maybe Facebook or so. Look at the internal political structure that is happening within Facebook. For instance, they say the CEO of Facebook gets fired, and a fundamental analyst follow those news, and he will concur those news within the chart. And the funny thing is, eventually, even the fundamental analyst, all of his analysis is all absorbed in a technical expertise. So eventually, the fundamentalist will always have to go concur the information and look at the chart, eventually technical. So it's better to use both. Technical analysis is built on 3 essential principles. I will not go through those principles, but I want us to go through the indicators that I have shown to you right there. On the top right there, I have my Bollinger Bands. Okay? Let me just drop it. I just want to make it a lot more clearer than it should look like. Now, as you can see, this is the Bollinger Bands as a whole. Okay, let us just read about it before I carry on with it so that we can have a basic understanding of what is the Bollinger Bands. Okay. All right. Okay, I think I should drop all the way down. I think the Bollinger Band explanation is just round about here, I think. Let us see it. Okay, this is the MACD going further on. All right. Common chart indicators. Okay. Bollinger Bands, the one I just show you is just on top. Bollinger Bands are used to measure a market's volatility. Basically, this little tool tells us whether the market is quiet or whether the market is loud. When the market is quiet, the bands contract. Okay, what they mean, the bands contract. This is the contraction they talk about. The band when they contract. Okay, this is the contraction. So the market is quiet, in other words. Okay, and when the market is loud, the bands expand. As you can see here, they expand. So I'm a bit slow for someone who is still new, who is been unable to identify the differences of different indicators, what they do. Indicators are there for different functions. Indicators have different functions. That's why I have 3 indicators, but at the same time, they have the ability to work simultaneously in different various dimensions of looking at the chart. But let's carry on. These bands will expand when the market is loud. When the market is quiet, the bands contrast. Simple as that. Okay. The bands expand. Okay. Notice on the chart below that when the price was quiet, the bands were close together. But when the price moved up, the bands spread apart. Okay, this is a theory-wise, this is a textbook way of looking at it. Now let us look at the chart, the actual chart right now. I'm looking at the Ethereum chart on a 15-minute chart, and this is a current chart. And Ethereum right now is raging on, trading at $3,000, 102.70 something, and it goes on and up and down in its volatile way. As usual, it is a volatile instrument, Ethereum, okay, doing quite well. Okay, now these are the current Bollinger Bands that I can refer to right now, what's happening. Now the bands contrasted at some point. This shows that the market was quiet. So, and then when the Ethereum took off at some point, and then the bands expanded. Now this is what this indicator for, measuring how loud or how quiet the market is. It's not necessarily telling you whether to buy or sell, whether the market is going up or down, but to give you simple information whether the market is quiet or it's loud. Volatility, that's all it's speaking of. It's talking about volatility. But now there is an extra weight that is added on the Bollinger Band when you are using the Bollinger Bands, and how to predict the market when using the Bollinger Band. Now, this is the basic part where I'm showing you whether the market is loud or whether it's quiet. Now, let us just see further on what we can learn about this indicator. Now, there's also a element or a sequence called the Bollinger Bounce. Okay, one thing you should know about Bollinger Bands is that price tends to return to the middle of the bands. That is the whole idea behind Bollinger Bands. If this is the case, then by looking at the chart below, can you tell us whether the price might go up or next? So they're trying to test you, but this is the textbook way of looking at it. So this is the Bollinger Bounce right here. Okay, so the market will bounce off this line right here, and then it will bounce off on the top line, of course. But let us look at the real chart on a real market day. Now, right here, you can see that the Ethereum had a Bollinger Bounce right here. And it is quite evident that when the Bollinger Bounce happened, it will always go opposite the direction. That's why they call it the bounce, because it bounces. Because the candlesticks will never go beyond these lines. We'll never find candlestick lying around outside the Bollinger Bands, no matter what. They will always be within the Bollinger Bands. And that restriction of the Bollinger Bands causes that bounce, and that bounce always seems to bring the prices back to the middle. And the middle that they speak of is this wide, small line right here. So just to show you a little bit of synopsis on how to get it, simple, just go here and you go to technical indicators. All right. Click technical indicators. Oh my God. All right. But anyway, as you can see here, like I just wanted to show you how you can, okay, now it appears, okay. Now this is where you can get your Bollinger Band. Now there's different types of Bollinger Bands that you can choose from, but I suggest if you are someone as a beginner, take something quite basics that you can understand. I took this basic one. And when you take this basic one, you can always modify them. Come here, modify them, go there right at the top, it will say BB. And when you say BB, and then it will have that settings option, and then you go to it, and then you can set your Bollinger Bands how you want it with various colors, using different colors. So you have that medium, upper line, and lower line, and so forth. So these indicators are not a strange thing that someone can be confused about when they are looking for them. They're right there on the chart. Okay, so as I'm saying, so there is this system called the Bollinger Bands. Now, if you are trading, if you are a trader currently right now, let me just talk about the current market price. There is a Bollinger Band that just happened. And as you can see, the Bollinger Bands contrasted here for the Ethereum 15-minute chart, and the volatility was quite low. Now, I'm looking at the chart right now this afternoon. All of a sudden, you can see that the Bollinger Bands has widened up, showing strong volatility signals right there. And the Bollinger Bounce has occurred. This is a 15-minute chart right there on that spot. This could be a signal telling you that you should put a sell order. Same right here, also right here. The Bollinger Bounce, it bounced right here in this position, and then it went right up, showing that if the bounce happens, it is a likely that the market will move opposite direction. And when that happens, when that Bollinger Bounce occurs, one would take advantage and place a buy order right there on the spot. Quite helpful if you follow it first and test it out first. See historical evidence as well. And it helps a lot. But, you know, if someone gets too excited with it, they might, misunderstand the whole thing. But it is quite something simple to understand the Bollinger Bands. Well, that was the Bollinger Bands. That's the first indicator that I would like to share with you right now. This is the first indicator. The Bollinger Bands, quite simple. Now it's widening up as the Ethereum goes up and it is on an uptrend. And that bounce right there could signal that the Ethereum would regress just a little bit, maybe back to the middle. Right there on that spot, you can count from that point to that point how many cents or how many dollars or how much money you're going to make if you would place a sell order on the 15-minute chart right now on the Ethereum chart if you are a trader. Okay, now let's carry on. Okay, another indicator that I have also featured on this discussion is the MACD, quite popular indicator, well-known indicator, sometimes called the MACD. Okay, let us just go through it also just on a basic level so that we can be able to understand these indicators from a basic structural level. Okay, I just want to go right up where they have the basic explanation before I go deep technically with it. Okay, okay, page 2, I think. I have it right here. All right, moving average convergence divergence, MACD. Quite popular, but there are people who still don't understand how it works. Okay, this indicator involves plotting two momentum lines. The MACD line is the difference between two exponential moving averages and the signal or trigger line, which is an exponential moving average of the difference. If the MACD or MACD and the trigger lines cross, then this is taken as a signal that a change in the trend is likely. Simple. Let me just explain it. This is the MACD, the yellow line right there. Okay, this is the MACD, MACD, moving average convergence divergence, and the signal line that they speak about. Okay, let me just refer back to the notes. The signal line or the trigger line, okay, it says here exponential moving average and the signal or the trigger line. This is the trigger line. Now, the trigger line consists of a 26 period. It is a 26 period set. It comes with a package of the indicator within the platform, the trading platform itself. Also, MT4 or MetaTrader 4 might have their own packaging that is set like 26 period, 12 period, and so forth. Okay, don't get too confused about the periods, but for now, let us just go through the basic. Now, the line right here you see is a MACD, and then this one is a signal line, the blue line. The signal line, which is a 26 period moving average, and then the 12 moving average is the yellow line. Now, the 12 moving average is the quick one. It reacts to the prices. It's the one that reacts to the prices. Then the signal line is just a signal line used for crossovers. Now, what they said about the crossovers, when the crossover up happens, it shows that there is a strong sign that the market or the trend itself will change from bullish to bearish or from bearish to bullish. Right there, this is a cross. I've spoken about crossovers plenty times, okay? But let us just carry on. I just want to go a little deeper about moving averages. Okay, there is more information regarding this indicator right here. Right. Okay, it speaks also with crossover as well. Okay, now. All right. Okay. MACD acronym for moving average, convergence, divergence. This tool is used to identify moving averages that are indicating a new trend, whether it's bullish or bearish. After all, our number one priority in trading is being able to find trend, because that is where the most money is made, okay, which is quite true. Now, this is just a textbook example of the MACD. What in MACD chart, you will usually see three numbers, 26, 9, and 12, okay, that are used for its settings. If you ever use these indicators, you'll always encounter these numbers. The first is the number of periods that is used to calculate the faster moving average. The faster moving average is the green line here. The faster moving average in this case is the yellow line here, which is a 12-period moving average. It is the faster moving average. Okay, let's carry on. The second line, the second is the number of periods that are used in the slower moving average, which is the red line in this case, which is the slower moving average. And then we carry on that side. This blue line here represents the slower moving average, which is above the yellow line, which means the market is a bearish market, or the market is weak, or the Bitcoin or Ethereum or the stock or particular currency is weak for that particular time. Okay, let's carry on. And the third is the number of bars that is used to calculate the moving average from the difference between the faster and slower moving average. Now, the difference of this and that between the slower and the faster moving average equals to this histogram here, which represents the 26. Sorry, not the 26, the 9 moving average. So the 9 period, okay? These are the histograms that I use. Now, notice the thing with these histograms. When the market goes up, the histogram tends to be going on the other side, on the upward side of the chart. And then when the market is weak, it comes down on the downside of the chart. Now, as you can see here, it gives you the signal as well when the trend, let's say for instance, for an uptrend, when it's strong, you can see that the lines are much more longer when it's strong. And then when it becomes weaker, and then it would give you a signal that the lines are going to become shorter and shorter and shorter, and eventually the trend tends and becomes a bearish trend, and then the lines becomes longer and longer, and then they become shorter and longer and become short. So it gives you that kind of a signal to show you how strong a bullish trend or a bearish trend is at a particular time. These histograms here, so they are working alongside with each other. So this indicator uses multiple indications to give you the future trend that you hope to perceive if you are a trader. This crossover here is an important element as well, one of them. Then, because it's in line with whatever is happening with the histogram as well. And then if you look right there on the top with the latest movements or the latest trend that is forming, you can see that the slower moving average and the faster moving average, which is the signal line and the MACD itself, are apart from each other. And that shows that this particular uptrend is still going on strong. As soon as you see these two lines coming together or trying to form a crossover, you can rest assured you can also look at your histogram as well, at these bars as they decrease in size. And when they decrease in size, they also give you a dimension or a signal that the trend is about to change from bullish to bearish, or from bearish to bullish. So watch out for that kind of indicator, which is quite helpful for you. But let's try and carry on and look deeper now into this moving average as well. For example, if you were to see 12, 26, and 9, hence I've shown you as the MACD parameters, which is usually the default setting for most charting packages like the trading view that I see, also MT4, MT5, and so forth. This is how you would interpret it. 12 represents the previous 12 bars of the faster moving average. The 26 represents the previous 26 bars of the slower moving average. The 9 represents the previous bars of the difference between the two moving averages. This is plotted vertical lines called histogram, the blue lines in the chart above. This is the histogram. Then these are the two moving averages. 3, Very simple to follow indicator. Very simple to study. If you just put your mind into it, you then can transform yourself and try to understand much more complicated moving averages. But before you move into that, I do advise for someone who is still a starter to start off with these basic indicators. They are quite popular. They are quite popular, but I'm giving you at the most basic level. Okay, now let us move on to another indicator as well that I have always recommended, which is the relative strength index. I'll share with you why I have chosen these three indicators. Why? Because they correspond. How so? If the indicator right here, the MACD, goes 30 and above, 70 and above, if I should put it right there, this shows that the market or the instrument itself is overbought. Therefore, it becomes too expensive, like the Ethereum right now. It's overbought. Therefore, it becomes too expensive and the market will regress just a little bit. Okay, but it did not regress completely, or it did not form a downtrend completely, because it's still going back to that oversold condition. And then conversely, or opposite side of it, when the market is gone right beyond 30 and below, we know about the 70 and above, but 30 and below, right on the chart, when it goes 30 and below, then the instrument is oversold. So this one measures overbought, oversold. That one measures crossovers. And the third indicator measures volatility, how loud or how silent is the market. 3 dimensions in one chart. You can look at the chart. You can look at it 3 dimensions in the chart. You are not limited to indicators. Not all indicators are 100%, and not all, even if those are bought in, even if you bought an indicator, that indicator will never be 100%. You know why? Because no one has been able to accurately predict the market. Yes, you may be lucky to predict it because you've used your previous experiences, but the accuracy is not definite. One thing for sure. That's why indication or indicators, these are not signals. Indication, they give you an indicator. If you indicate to the left driving a car, you just simply go to the left, but not knowing what is there on the left side or the right side. There can be a lot of things happening before that or after that and so forth. So indicators are there to be also be monitored as much as you watch your candlesticks as well. But they are there to give you that extra boost for you to better understand the market situation at that at that point, you know, so that you can be able to make some accurate prediction, maybe make an accurate prediction of having to know whether the market will go up or down. We try also here on the show to predict the markets, but I am not accurate. I am not 100%, but I will give you an indication using also these technical indicators. These are some of the technical indicators. Another formula that is popular when trading is using common patterns. Common patterns are quite popular. If you are not using indicators, there are those who use common patterns. These are not indicators. I know I spoke about indicators, but I want to share with you some common patterns. Some of these common patterns can be known as double bottom. I'm looking at the Ethereum chart on a 1-day chart. Okay, Ethereum on a 1-day chart. Okay, I have my support and my resistance here, right? And my resistance, according to technical expertise, when you are having a double bottom right here, this is a double bottom. Okay, this is the first bottom, and this is the second bottom. And where there is a first and the second bottom, this is where it's going to be equals to your support level. And then when you have your resistance level right there, it is known aka neckline. Some experts say Ethereum has broken an important resistance level. I do not dispute that because I am observing that right now on the daily chart. Right there, this resistance level right here has been broken by Ethereum. This has shown to be that this is going to be a strong bullish trend. Now, with a double bottom, it is a bullish reversal, traditionally speaking. And then there is also what has been called double tops, which is a bearish reversal, another side of it. Okay, so but what we are witnessing with the Ethereum is a double bottom showing a bullish or a strong, rather particularly in this situation, a strong bullish reversal. So these are some of the techniques that I use either than indicators. Okay, these are some techniques that I use either than indicators. Okay, all right, let me just looking at the chart right now. Let us look at the market as a whole. Bitcoin right now also having, I think I've put in some common patterns as well, trading at $43,000 and higher. Okay, before I carry on, please be sure to subscribe. Okay, let me just go there. Let me just go there. Invite your friends. Thank you. Please invite your friends. Share the live show. And subscribe and win. This is the market analysis. And we've been doing basic indicators. Forgot to put that up right there so that people can see, what I'm dealing with here. So that they can see, before I do any market analysis, they can see that, I'm doing some basic stuff, man, some basic indicators that I have just shown you, MACD, relative strength index, and so forth. And they work hand in hand, as I've shown you. Okay, and okay, this BTC chart is still forming right here. Let's analyze some BTC charts. Come on. All right, and I want to go back to that market analysis. All right, BTC, I'm looking at the 15-minute chart, which is not a good idea for now. Let me just go to a daily chart so that we can do some daily analysis. Now, with the Ethereum, we observed that there was a double bottom. But looking at the BTC chart, okay, I did not invite these indicators on the BTC chart. Like, honestly, I don't know why these charts are like having these moods with me at times. And this is a very, very important time where I'm doing a presentation. And these charts just show themselves up with great attitude. But it's okay. We can always just remove it. And right, always have that support in my resistant line right there. Okay, I know that. Okay, all right. I know what's going on here. All right. Let us just do a practical analysis. Let me remove drawings and remove the indicators. Right click and say remove indicators. Okay, right. It's easy. Now, look at that strong trend. Now, if you notice with the BTC chart, I have a daily chart here. Unlike the Ethereum chart right here, which is also a daily chart, it shows you a strong indication of a double bottom. A double bottom is a strong indication, whereas the BTC on the other side does not have that clarity. So it's a tricky situation because the volatility was quite low. If I put a Bollinger Bands here, I could see them contrasting already. So it broke out and then it went off. That is why Ethereum has been doing so well, gaining 14% and upwards and so forth. I can go to the coin market cap right now. Coin market cap right now will tell you how strong the Ethereum has been in the past few, even alongside the Ripple. Now, before I go any further, I can see that 2 trillion market cap right there has reached, which means the market is quite bullish. Yesterday it was 1.9 trillion, but it's back to its normal 2 trillion. That's the number right there that we all familiar with, you know. Okay, going down. Like I was saying, look at that, 11.65% against the Bitcoin, which is 8.23% in the 7-day percentage gains. And Bitcoin right here, 3.85, 3.83 on this day. Well, it's doing a little bit better than Ethereum, but let us look at the biggest gainer of the day, okay? Which is Cardano. Once again, Cardano is doing extremely well. I think I should rock up a chart. I need to do some analysis on Cardano, man. You know, Cardano has been hot, you know, 40.45% in gains. I think it's the biggest gainer on the top 10. On the top 10, maybe on the top 20, maybe there are other charts that are there open, but most of the time I devise the top 10 of the cryptocurrency space. But oh well, that is the Bitcoin and Ethereum difference right there. Ethereum has been doing very well more than the Bitcoin. Hence we see this strong volatility. And volatility, the reason why volatility is a friend of Wall Street, it's because volatility is able to form these market trends. And from these market trends, they can be able to tell the future story or what could happen next. Unlike if you see a chart like this with lack of volatility and all of a sudden, boom, it goes up. It can be tricky because boom, it can go down as well. So 2 ways. Okay, there can be 2 ways to this that can happen. All right, now let's go look at the news as well. What's happening on the Wall Street, on the market as a whole, global market as a whole, how they are doing. Wall Street opens higher. Now, what have we experienced in the past few weeks is that the stock market moves alongside with the cryptocurrency market, especially since this war began in Ukraine. Wall Street opens higher as data send mixed signals, though up 120 points. Sorry, you can see the greens. That green zone that shows that the market is all healthy. But coincidentally, once you see the stock market raging or surging, it is likely to see the oil or commodities going opposite direction. I'm looking at the UK oil right now. Let's just look at the UK oil right now. Right quickly. Okay. Just quickly, man. Just look at the UK oil analysis. Okay, I just want to show people how this market works during this time. It has not yet normalizes. The stock market goes up, commodities seems to be plunging down because of these sanctions that I have imposed on Russia, and Russia being one of the gas or energy providers, and they will also have potential to have an influence on oil prices, even though they are sanctioned. But oil prices are affected because of the war. It's not always like this. Don't ever think maybe coming next year, 2024, when things are different and you see the market go up and you think, okay, oil is going down. It's likely that the oil will just stabilize to its normal level. It is just in this day and age that people should take advantage of what's happening. And as a trader, obviously, you know what's happening, especially if you're an experienced trader. Look at this chart right now. 1 hour chart, UK oil has been taking a knock right there. I can also go to the US oil as well. So commodities are taking a knock while Bitcoin and other instruments like stocks, probably some currencies, are taking up, or they have been surging. Let us look at the Apple stock as well. Look at the Apple stock. Apple stock has been thriving on a 1 hour chart. Look at that. Rising 172 and up, almost reaching that 174 point. But also the gold is also part of the commodity. Once was 2,000 an ounce per gold, but it's trying to reach its great glory that it did. But gold is also another investment that investors hope to hedge on. It's likely that gold might break away from that traditional commodity sector because gold in itself is a different investment than oil. Different investment. But yet we're seeing it reacting alongside with oil, maybe because it's a commodity, you know, and most of investors are hedging their monies, investing in gold, because gold itself, we see, you know, people are amazed with this 2 trillion market cap that you see on Bitcoin. But do you know what's the market cap for gold? $8 trillion a day. $8 trillion 24 hours. Here you have 2 trillion with the Bitcoin. With gold, it's 8 trillion or 7 trillion. I'm not too sure. 7 or 8 trillion market cap of gold. Quite a remarkable market cap right there. But it's been there for long. Let us not forget that it's been there for long. Whereas Bitcoin has been here since 2009. And it has superseded most of the crypto or most of the financial instruments or traditional markets that has been long been there. So it's yet going to grow to its 3 trillion, 4 trillion. It's a digital gold. It might even catch up to the gold itself that we see today. Okay, I think that's all I have for you today on the cryptocurrency markets and the market as a whole. Thank you for joining me today or tonight. This is Empire Crypto TV. We are with Stone. Join me again tomorrow on another show, and keep in touch, and please do send in your comment and your questions. If you have none, it's okay. And if you have some, please bring them aboard Empire Crypto TV. We also have a live chart right now playing with signals, whether to buy or sell. Please go on Empire Crypto TV. It's live 24 hours, and you'll be seeing, giving you signals every day from day to day, and also giving you news right there at the bottom running. We'll be giving you fundamental analysis and technical signals that are provided for free here at Empire Crypto TV. So thank you very much for joining me tonight, and good night. Thank you. All right, I'm just reading in Tabise Mudisi. Right. Thank you. See you tomorrow. All right. I hope you come through tomorrow in Tabise Mudisi. Thank you for that comment. That was just the only thing that I just wanted to read. And yes, this Empire Crypto TV, it has been good. Thank you very much.